In this video, I'm gonna break down the concepts of absorption, exhaustion, initiation, and how to measure effort versus result in trading. Now, before I begin, I want to let you know that in the bio of this video, you're gonna find links for my free Discord, free Telegram, and also free bootcamp. If you want to go more in depth, you can join the private network, which currently it's unlocked. It's gonna get locked again soon. So if you want to be following my personal positions, trades, live trading, daily updates, weekly outlooks, 200 hours of education, you can find it all inside. Now, this is how much money I made last month. And if you don't want to join the private network, you can still join the free Telegram and the free Discord, which it's still packed with tons of information and live trading. What is the difference between effort versus result in trading? Now, the energy, the volume, the market expands. This is the effort. The effort is the energy. The effort is the volume. This is when the market expands. And the result is the price movement achieved. Effort without result often signals hidden forces at work, like smart money absorbing that liquidity. Now, in terms of key concepts, what is the absorption? The absorption is when large players are absorbing orders without significant price movement. This is when you have high volume but small price changes. Think of absorption as a sponge soaking up the water. It happens quietly, but it's building up for a big move. And the exhaustion is when one side of the market runs out of steam. This happens when you have decreasing volume near key levels with weak follow-through. And this exhaustion occurs when the market tries but fails to push past a level, and it's a sign that trend might reverse. What is the initiation? The initiation is when the momentum kicks after absorption or exhaustion, leading to strong directional moves. This means large candles, increasing volume, and breakout levels. Initiation is the burst of energy that moves the market decisively. It's where opportunity lies. Now, the tools to analyze this. How to identify the difference. Now, first, volume analysis. High effort but low result often signals absorption. Candlestick patterns. Weak candles after a trend can signal that's exhaustion. Market profile. Look for areas of heavy volume where absorption may occur. And then you have the practical strategies, which are trading absorption, wait for the breakout confirmation. Trading exhaustion, look for the reversal signals. Trading the initiation, enter early during the initiation phase with volume spikes and momentum. Then you have the real life examples, where I'm gonna show you a few pictures in just a second. But this is basically what I was just talking about. The initiation leading to the breakout moves, exhaustion at the end of the trend, absorption at resistance or support. If this is still not clear for you, pause the video and look at it. Example number 1. In this example, I'm gonna be looking at Bitcoin on the 5-minute chart, where I have a nice move up with a big increase in the delta, very big positive delta, very big spike in volume, and a big increase in the open interest. What this means? This means you have a lot of buyers, aggressive buyers coming into $108,000. Then price struggles to make new highs and does that type of a slow grind formation and fails to make a new high. High, lower high, another lower high. And then a breakdown with an increase in the volume. You can see that, right? Then you have another backtest of that previous floor, 108. And then you continue with the breakdown. This is an example, exhaustion at the end of trend. In this example, now, $101,000. This low right here. You have a negative delta, a bit of a spike in the volume, not that much increase in the open interest, and you also sweep a previous low. Now this is a good low, and this is absorption at support, right? Someone absorbed these market sells. And then price, what it does, the market structure, slow grinds to the upside. Low, high, low, high, low, high, low. And this slow grind formation continues to pop into higher prices. Now, this example right here is, let me just check something. Yes, this is this picture is gonna show the CVD divergence, right? When you have more negative sales absorbed by limit buys. So as I told you, here is the absorption at support, and here the proof is the CVD divergence, because you have more negative delta, cumulative volume delta, CVD cumulative delta. So you have a lot of market sales being absorbed by limit buys, and this is the proof in the order flow. You make a lower low on the CVD, but you make high high in price. This is classified as a bullish divergence, and that's why price starts uptrending. And you can identify this very early on. You don't have to enter into that exact low. You can wait for the CVD divergence. In this example, I'm gonna show you the initiation leading to the breakout move. So this is when price reached 109. You have that. So in this screenshot, I showed you the exhaustion, and here is that initiation. When sellers took absolute control, is at 107. Why? Because we have that big increase in the volume. We have that negative delta coming in, so sellers try to gain control. This is the initiation. So be aware that there's a difference between the initiation and the exhaustion. So this is the exhaustion here. This is the exhaustion, but you have initiation as well. So in this spot, if you want to wait for the confronting, you need to be waiting for the initiation of that move. And this is the initiation. In terms of a conclusion and recap, absorption, exhaustion, and initiation are powerful tools to measure the effort versus result, and they will help you to understand the story behind price action. Master these concepts and you'll gain an edge into spotting opportunities and avoiding traps.